All right, Joshua. So today we're going to talk about the Friday's price action, and I'm going to talk about in depth about the thing that I wanted to talk about yesterday, but we ran out of time. So today I'm going to amplify upon that lecture. One more thing that I want to also state before we begin the session is that in 2025, I wanted previously to shut down my Mentorship 2.0 in terms of making it more private towards you and the other student, but I believe that my model is going to be again the Mentorship 2.0 that I planned out to be in terms of the general videos, and then you can request a one-on-one session. We have also paid out for the signals, so we're still going to do that. We're going to do that with the Discord channel. That is also going to serve as a mentorship session by extension. And that will be free, of course, because you paid for it. But I'm going to go back to my model in which I mentor because I don't want my focus to be split. And I don't really like giving signals, like typing it out, buy and sell, because that takes away my attention from the marketplace. And I don't want to do that. I don't want to sacrifice my own trading development for the sake of giving signals. And that might sound selfish, but it is a trade-off because right now I would have to think about your own money too, and I will do that. But we'll have the the signals. I will take care of, or I will advise you to take. I will not advise you because I'm not a licensed advisor, but I will help you into deciding on your own that you can trade if you decide on your own. My own premises about the market. So, one more thing I want to touch, which might be relevant, is that this is the beginning of my trading season. So I might not see the things as clear as I've did back in 2024 because I've took a break upon December, the whole month. But let's just get started with the lesson. So, the first thing that I want to talk about is going to be the weekly chart. And the candlestick we're going to look at is going to be this one. In the left, I have annotated the premise, which is that the market reached a higher time frame yearly target, which is the 25% BT. So those targets are still intact. You can see how the market never closed above it. Therefore, we never moved into the 50% BT, which is above the 25% BT. Along with the fact that we're trading in the accumulation part of the year. So number one thing that I want to tell you is that when the market reaches a target, whether that's going to be an intraday target, an intra-week target, an intra-month target, or whatever higher time frame target that you will have, we're going to sit still and we're going to wait and see what the market wants to do next, because the market can either reverse or consolidate in this case. So when we're going to have our target met, we're going to be content, and we're going to, if you are trying to do that, if this is on a weekly basis, we're going to trade intraday or intra-week volatility. Therefore, we knew that we were predisposed to see a consolidating week. So, because we reached a target, that's number one. Number two, because we are trading within the accumulation part of the year. Now, knowing this, what I'm going to do is I'm going to look for the specific daily range in which we're going to accumulate in, or in which we're going to consolidate in. But at the same time, I want to make you understand the fact that we have a current balanced price range dealing range with the all-time highs being taken. So my dealing range would be from this low up until this high the equilibrium would be around this price range in which we're going to see that the market consolidates in. The weekly PD arrays that I have annotated right here, or that I have in my eye, are the following. The order block, this order block's opening price, more specifically the order block mean threshold, and the quadrant levels of the consolidation used BISI. And as I've stated in the writing that I have my cursor on, we will use the BISI as a PD array in which the market is going to consolidate inside, meaning we will use the quadrant levels as a means of intraday targeting. So when the market reaches back into the consolidation used BISI, when the market reaches into its low, we're going to expect, because we're trading inside of a consolidation week and we do not anticipate a high time frame macro expansion, that the market is going to move back into the lower quadrant, the consequent encouragement, and the upper quadrant. So what I saw prior to this week's opening was the fact that the market created a swing high, as you can see, within the 25% BT. And I'm not going to point that out because I want you to go and look for it. The market has fell short of the lower quadrant of said week, forming a swing high. But this does not mean that this short-term high is going to stay intact. I just mean that for this week, because we've had a consolidation-based premise, I do not want to see the price go above the previous weekly's high or the previous week's high, and I would have wanted to see the previous weekly low being taken. But because we had the New Year's opening within this current week's range, and we've had a bank holiday for Wednesday, I believe. I'm not sure. Wednesday was. We're not going to trade, of course, Monday, Tuesday, and then we're going to go ahead and trade Friday, because Thursday is the day before the day after the bank holiday. So what I want from this price range, what I want from the weekly range, is I'm not going to look at the charts, or I'm going to look, but I'm not going to act upon Monday, Tuesday, Wednesday, Thursday. And when I arrive at the charts, it is already going to be Friday. So I will already see the market's range prior to Friday. That's important. So what did the market do ahead of Friday? Well, we can see that we beautifully used the consequent encouragement of the tail, which is in shaded or is in red. The market opened, went into it beautifully, and then we went lower back into the yearly measuring gap standard deviation, which is a deviation that I've did upon my 12-month chart. So when I'm going to arrive at the market and I have my consolidation premise, I will see where the market is on Friday. And based on my consolidation premise, knowing the fact that the market does not have an intra-year or a draw on liquidity, which is clearly stated, I'm going to use my intra-week consolidation premise. Switching to a 15-minute chart, knowing the fact that the market is at the BISI low, exactly as I've stated back into my weekly chart, we're going to use these levels as a means of support or as a means of targeting for intraday trading. So where are we in terms or in correlation with the weekly levels that we have annotated? Well, we are in the lower half or the lower bottom of the BISI. When are we going to come to the charts? We're going to come to the charts at 9:30 and also 10 o'clock, because we know that we had news. So every singular piece of price action right here between 10 o'clock, between 2 o'clock and 5 o'clock, between 7 o'clock to 9 o'clock, that is going to be materialized already. So I do not worry about any singular opportunity here, but instead, because I know that I saw the high impact news drivers calendar having a high impact news driver at 10, I'm going to directly think exactly like I've stated yesterday. I already have this in my mind that, okay, whatever the market did prior, I don't care. And if I have a bullish bias for the day, not for the week, for the day, I will want to see the market take on a level of sell side. So bullish bias, meaning I want to see sell side taken, opposing taken before I do anything. So when we come at the charts at 10 o'clock, I already know what I want to expect. So what I've written here is the fact that we had an expansion at 8:30 to 10 o'clock, a big range, and what I want to amplify upon the fact that if we see, and this is how we use the London session and the previous session as a means of information. If we see a big range in London session or the 7 o'clock to 10 o'clock, there is a high degree of probability that the market is going to consolidate between 9:30 and 10 o'clock. If the market is going to consolidate, meaning that it's going to accumulate orders, meaning that it's going to have to run a level of sell stops before we depart higher, then it means that I will not look for any expansional movement inside of the 9:30 to 11 o'clock perhaps, and I would want to see the launch macro taking on the previous highs, and this is all based on time. So 10 o'clock news is going to take a level of sell stops, which we have in this case, and this is what I've stated. Therefore, the 9:30 opening might be predisposed to consolidations, meaning that the launch session will attack the already existing previous session highs. So big ranges in the London session are going to turn into consolidations, and if I anticipate the market to go higher and I have a target above the market that is higher and it's still unrealized by time, by 11 o'clock, then I will anticipate the market to run at 11 o'clock, targeting the AM session highs, previous session model again. So this is based on time, and you will do nothing because you will be asleep. And this is why I always preach, like, okay, you just missed this opportunity. You physically, your schedule does not allow you to go and look for something in the lunch session. So meaning that you will let this go. Or if you have the opportunity to trade between 10:50 and 11:10, that's fine for me, but I would advise you to stick to your rule sets and try to be as close to your schedule as possible, because that makes it reflexive. That's what I wanted to preach in the POT video. The reason why I gave you a schedule, and the reason why I always tell you to follow the schedule, is because I want it to become reflexive. I want it to become boring. This is how you want your trading to be, boring. I want you to just go into the market and expect the same thing happening over and over again. Because if I wanted to ask you, Joshua, how do you want trading to be? Do you want to make a consistent income from trading, or do you want it to be sugar high every singular day? I want to be happy or sad about the outcome. Do you want your income and your family's stability to be based upon something that is boring and something that is repeatable and something that is consistent? Or do you want sugar highs and you want to feel good about your trading? Of course, it is very good to love trading and to like the trade in itself, but do you want your family to be insecure, and do you want your income to be insecure and uncertain? Or do you want to remove some degree of that uncertainty by following the same schedule, following the same model, and just doing the SOPs, standard operation procedures? So what do we want to see from the price? Market going back to a discount, to a BC, running a level of sell stops within the AM session. If I want to see a level of sell stops being run, when do I want it to start? I'm going to look at the economic calendar. my model states the fact that I want to see a previous level of sell side being taken, and most importantly, throughout the high impact news drivers calendar. The reason why we want that is because retail minded traders are going to look at that high impact news drivers calendar and at that news event as an opportunity for them to get into a trade and profit off the volatility, which is uncertain and which is going to always get them out. They want to be in the explosive movement so they can make big money. That's their premise. That's why we do not trade ahead of the news, because the market is going to attack both sides of the market, like you see here. And if we had a bullish bias, then we're going to anticipate first level of sell side to be taken. But the reason why we do not go at 10 o'clock, which you did, the reason why we do not go at 10 o'clock to trade is because we know the fact that the retail traders have to be out because they're greedy. The market capitalized on their greed to trade within the news volatility because the market or the algorithm knows or is coded into a way for us to firstly accumulate their positions and capitalize on their unawareness of the algorithm, of the knowledge. We know that they're greedy. So what are they going to do? They're going to try and follow the big movement. So what is the big movement? Well, first of all, they see that big candlestick at 9:30. They're going to try and buy it ahead of the news. So if they're going to try and buy it, where is the market going to go first? Below the level of sell stops. Same way, there are going to be retail traders or retail-oriented traders that are going to go short within the movement that happens inside of the news. So the best rule set for you to understand with the high impact news drivers is that you're not going to trade the 10 o'clock news or the 8:30 news. The first hour in which you're going to look at trying to get something from the market is going to be after 30 minutes after the news drivers materialized. So this means that we're going to look at what? If the news drivers are going to be at 10, we're going to look for something opposing to what happened at 10:30, 30 minutes after. We can see that the market retraced back into a busy. We never anticipated this low to be taken. We've had an expansion which created the reversal. So when the market reaches this point, I'm going to switch to a 1-minute chart. What we can see here is the exact thing that I was explaining. People are going to go along here ahead of the news. Market is going to take the level of sell stops. It's going to trip them back in. Again, these people are greedy, so they're going to try and buy it. Of course, they're not going to go out at this high because they're too greedy and they believe that this movement is going to continue to the upside. Market takes on again this level of sell side, and now they're demoralized. They are afraid. Think about the things that I've told you yesterday about fear and greed. They were greedy one time, they're lost. They say, okay, now the market is really going to go to the upside. I'm going to get back in. And they are correct, exactly like I've stated in the POT, but they're going to be shown incorrect one more time. What is going to happen here once they've taken their second stop? They are going to be scared to get into the position again. This is where the smart money paradigm and the smart money logic comes into play. We have successfully cannibalized these retail traders. They're too scared to get into the main movement, the real movement again. So we're going to seek every singular signature that is going to tell us that the market is now going to move bullishly. When? 30 minutes after the news. When does the market go higher? We can name this as a market structure shift. We have 1, 2, and then the third PD array gets violated here. Market comes back into the busy. This would be our range from this low to this high. Market never reaches or eyeballing it I don't think it reaches the 50% or the equilibrium, or this is a wick. It reaches it, okay? Market goes back into a discount. We accumulate their positions below the level of sell side. Market creates a swing low. This is how I see it. Auto block. I already anticipate this to be an auto block, so therefore when the market closes above it or above its 50%, I want to see that 50% being used as a means of support. Market goes higher, and right here, this, because the market went back into the busy, made it efficient, and then we left it taking on a swing high. That is going to be a what? An intermediate term low. Market goes higher. This is going to be a balanced price change leading range. This even, intermediate term low, higher. When the market comes back into this range, because we've bounced off this inversion gap, I'm going to look for order block. Here, wicks, retraces, goes higher. Market never closes above the 50%. Goes back, consolidates. Here, takes one more time this high. And when do we anticipate the market to run? The reason why the market never run between 10:30 to 10:50 is because we need the time period. When is the market going to capitalize upon these buy-side liquidity pools, these retail traders? Between the 10:50 and 11:10 macro. That is when the movement is going to start. It does not mean that the movement ends at this time period. It does not mean that we have to take a trade within this time period. This just means that the market is going to start spooling into our direction inside of this time period. If we're going to look at the big range from this low up into this high, we know that this low does not have to be taken. So therefore, what are we going to look for? Consequent encroachment of this wick never gets violated, taking on a level of sell stops. How am I so consistent into knowing the fact that this is just a level of sell stops being taken? Unrealized target. I see this high because of my bias. I see this high as a means of an engineered buy side right here. So it means that the retail traders are going to try and go short once more because they see this as equal highs, which tells them that this is a resistance, which is not. If we go back below level of sell stops, consequent encroachment of the tail, which is again an inefficiency. The market or the algorithm will see this as a means of inefficiency. And once this happens, because I know that the market is going to start capitalizing on the AM session, the previous session, because I expect the market to go higher throughout the lunch, which can start from 11 o'clock, I'm going to aim for these highs to be taken throughout the lunch session. So the market will not take this until this starts, until this specific time period starts. And when this happens, when the market takes on this level of sell stops throughout my 10:50 to 11:10 time period, what I'm going to do is I'm going to look and start measuring if my premise is correct. So in this candlestick here, I'm going to start and be highly opinionated about the market. Until this point, I will just look and constantly measure. Okay, the market went higher, lower. Good. The market did this. But when this macro happens, then I'm going to be very opinionated and I'm going to start looking for the things that I want to see within price. These are the weekly busy consolidation used busy levels that we had annotated on a weekly chart. You can see how beautifully we respect it here. Market closed above them, never reached the consequent encroachment of the consolidation used busy. So that is again this here is a high probability target. Look at how these candlesticks never closed above it here. And I already target this upper quadrant. I already target something above, which you've had the previous daily highs. So these are unrealized targets. This is also an unrealized target. So inside of this candlestick, what I'm going to do is I'm going to do the following. Market never closed below this level of sell stops. That tells me the fact that the market is strong to the upside. Market never reached back below this low. Again, I can take this as a means of a strength signature. Again, market never reached inside of this balanced price change dealing range that I was telling you. Market reached back into it. We created a swing low. We closed, look at the detail. We closed above the lower quadrant of the consolidation used busy. So it means that I want to see the market use it as a means of support, meaning that the market will open, go back into it, and then it will price higher away from it. And if the market does this, and I anticipate, this is the reason why I anticipate these signatures to work, because I anticipate already, because of everything that I was talking about prior, I already anticipate this to be an expansion. I already anticipate that 1050 to 1110 to start the expansion. Level of sell stops being taken. This can be taken as a means of reversal, right? So if you want to see the market reverse, we're going to correlate it with the PD array of liquidity pools. A liquidity pool is going to be taken. So therefore, where am I going to look for in terms of the next? The opposing liquidity pool, which is in the algorithmic phases explanation. And for the market to reach this liquidity pool, we're going to use what? An expansion, meaning that I'm going to look for what? For order blocks. So when this happens, when the market closes above the lower quadrant, I'm going to aim for this. My eye will jump straight from this. But until we reach that target, I want to see the fact that the market is indeed going to go there. So I want to see signatures that the market is going to violate bearish PD arrays, which is also this breaker, because we have a high and then the market takes on the low. Market goes higher. You can see the 75%. Market reaches back into the 50% or the mean threshold of this breaker. We create an immediate rebalance, which tells us that the market has to move higher with speed within the next 2 or 3 or 4 candlesticks. Market closes above it, so therefore, what do I anticipate? I never want to see, or I prefer not to see, the 50% of this breaker being used. Look at the bodies of the candlesticks here. 75% of the breaker never closes below it. Market creates a swing low here using this order block and this order block, again, expansion. Then the market moves higher. This speed array, 25%. Market goes back into the order block once we use the breaker and expands higher into the 75%. I'm constantly measuring. Okay, this is speed. When this candlestick happens, I'm going to look for the market to expand higher into the high. We did it. Market comes back into it using, again, another order block. And then market goes higher above the inversion gap consequent encroachment. So inside of this candlestick, because we closed above it with an expansional perspective, I also want to see the market close above this, yes. But I know that the market has to hunt now the 75% again. And because we went already to the 75%, if we were bearish, this should never happen. 75%, and we should have expanded lower. It never did. Also, look at the 50% of this wick, right? Candlestick closures. So therefore, if the market is going to reach back into the 75% of this inversion gap, or this SIBI, this one, then I know that we are bullish, because this should have never happened. When the market reaches back into it, I know that the market has to expand higher through it with speed. Market opens, reaches back into the order block opening price, goes higher, and then closes above it. This here, if we're going to measure from this low up into this high, or from this low to this high, this is going to be the 75% of the implied dealing range. So what are we going to anticipate? We're going to anticipate the markets to go higher without doing big retracements. 75% of implied dealing range. Market opens, goes higher, and then once the market opens, goes back into this inefficiency and goes higher, I know that this is going to be a balanced price range dealing range. And if we measure from this low up to this high, this is where the 75% of the implied dealing range begins for this range. So therefore, I'm going to look for the market expanding higher with speed instead of my targets and never making big retracements. Market does some sort of fair value gap here, never reaches back into it, sign of speed, goes higher, and at the consolidation used upper quadrant, we're going to see the market open, immediate rebalance, and then eventually hit our target. And how much higher can we go above that target? I'm going to project with the breaker standard deviations. The reason why I project this breaker standard deviation is because this was the breaker that has been used in order to take the sell stops, in order to manipulate these people lower. So if smart money is going to use this breaker as a means of manipulation, then they're going to want to be at a least of a double, or this is how I internalize it. They're going to want to go out at a double profit, at least double this range. So we're going to target the minus 1.5, the minus 2, and then eventually higher until we reach this target. And what I'm going to do above this, once we go above the high, right here, this is also balanced price range dealing range, a big balanced price range dealing range because we went above it. So I do not want to see the market go back into it until we reach this target. I'm going to constantly measure. Market goes higher. I'm going to look at the minus 1.5 and the minus 2, 50%, 25%, 75%. You can see that 25% is here. Never closed above it here inside of this candlestick. Goes back into the order block, and then it moves higher instantly. Never goes back into the 50% between the minus 2, minus 2.5. Falls short of it, but I want to see the market go higher, so this does not tell me that the market is weak. Order block, again, swing low. I want to see the market close above the 50% of this order block, so it tells me that the market is going to use this as a means of propulsing the price higher. Look at how accurate the candlestick closures are inside of this. Market closes above the 50% and it goes into the 75%, and that's the minus 2.5. And as you can see here, 50% of this 2.5 and 3, market never closes above it. Never closes above it. And then at a specific time, 11:50 to 10, 11, it was meant to be 11:50 to 12:10, market targets these sell stops that were used for this run higher. So you tell me if this is precise or not. You tell me if this works or not. Highly precision signatures are seen here, are also seen here, are seen everywhere. Based on just the understanding. I want you to internalize the logic of capitalizing on these retail traders. When are they taken out of the marketplace? When they're taken out of the marketplace, that's when we go in. And where do the opposing retail traders have their stop losses? That's where we're going to take off our positions. That's where we're going to profit. And then I'm constantly measuring. Okay. The market closed above this. So we never want to see the market go back into it because it had already done the work. Market never does. Market reached back into this order block, propulsing higher, going above this range. I never want to see the market go deep retracements. Never did. What am I anticipating? Expansions, solid expansions, order block, order block, order block, order block. Notice that there's no big retracement like we saw here. Market shifted, expansion lower, reversal, liquidity pools. When the market is low here, if I anticipate a reversal, I'm going to shift my attention to this buy side liquidity pool. Expansion, reversal, retracement, expansion, and so on and so forth. Consolidation. How do we go outside of the consolidation? expansion to the downside. Do we anticipate the market to go to the downside? No, we anticipate the market to continue higher. What are we going to want to see? A reversal. What do I anticipate? Market going below this level of sell stops. Do I want to see the market go below this level of sell stops? No, I want to see the market go below this, accumulate, then go above this to create a reversal. How are we going to create this reversal? Expansion. So when the market is here, I already look here based on the algorithmic phases. And when the market is expanding higher and this is unrealized, I look for order blocks to send price higher. Every singular candlestick, every singular down close candlestick should support price higher if we are correct, like we see here. So I hope you gained more insight from this. I hope you gained more value from this than you did previously with, and I hope this was a good addition for the perspective that you had yesterday. And I want you to be ready for the 2025 mentorship because there's going to be more of this. And you're going to have to keep up, not in a bad way, but in a good way. So, how much you were focused prior in December and in November, I want you to double down on that. I don't want you to go out and spend your energy looking at any other traders in this industry because you paid me. You made a financial commitment to me. Not only financial, but also with your attention and with your energy. Don't waste it on other educators. Not because they're not good, not because they're not saying the right things, but they're going to create conflictual thoughts. Because I can say this, and then the other educator, which might have other perspectives, he will say otherwise. He might take a shorting position here, which is nothing wrong if that is their model. But I don't want to use that model. So I'm giving you what I believe is the best way to approach trading. And I want you to just stick to me, not to me for the sake of me. Stick to ICT if that suits you. And don't continue the StoianCapital mentorship if that suits you. I want you to do the best decision for yourself, like I did for myself, and be your own hero. Do you believe that these heroes, or ICT, or who you see on YouTube, I mean, not on YouTube because there are a lot of fakes, but if you want to be an independent trader, think about what independent means. Not only independent of financial, but also about your opinion. Be independent and be comfortable with being wrong. I would rather be wrong in my own opinion than to be right with somebody else's opinion about the marketplace. Because I have formed that opinion with my own logic, and if it fails, I know why it failed. Or I can go in and try to look why it failed. And that's how I grow. But don't let these people influence your opinion. Nobody. Not even me when I say that, okay, I want to see the market go higher for this week. Exactly as I've stated in one of my lectures from the 2.0. Do not let your opinion be influenced because you're a trader. If you let me just tell you how accurate this is. How professional you have to be with this. Even 0.1% of an influence from somebody else is going to affect your mental while you're trading. Even 1% or 0.1%. 0.1%. So this is how professional you have to be in this industry. And this does not come from me just stating this word. Think about what it means. You have to be aware of everything and you have to plan everything in your own rationale without me or somebody else influencing your opinion. Let me just give you an example. Okay, I have this monthly income from Uber, from your perspective. I don't care about what STO says in regards to my own personal financing. I'm not going to be influenced by STO or Stoyan's goals. Perhaps I might have a $100,000 per month goal. I'm not going to be influenced by that. I'm going to have a $1,000 per month goal for my trading because I'm still in the beginning and I'm still learning and I've hurt myself and I have to understand where I've hurt myself. And I'm not going to be influenced by these people because everybody else's journey is different. And the reason why God created you in this way is because He has a plan for you. And He has a specific plan for you. And that's why you're inside of this position. So if I was Joshua, I would understand what position I'm in. I would understand the fact that perhaps I'm in debt. I would understand the fact that I am high in age and I've did a lot of wrong things in the past. But the past is the past. And I'm going to use everything that I have right now to put myself into the best position. And this is not motivational. Think about this. Okay, I'm in debt. I owe this money to these people. I am grateful that I'm in this position because after I clear out the debt, I'm going to have knowledge that this debt did not kill me. And I was so strong throughout that period of time that this did not even kill me. And I'm at this level. So think about your whole life as a journey. And I'm going to close it with this. Think genuinely, this is not motivational. Think about it. You're at the end of your life, looking back at this exact moment. How would you wish you lived it? In fear of some money that you owe, or the fact that you did not start a family right now? Did you ever think the fact that it is within God's plan that you do not have a family right now? Imagine you've actually had a family right now to take care of. You would have time for nothing. So everything happens for a reason, Joshua. Live your life how you wish at the end of your life. You will look back. How do you wish you lived it? Investing every singular second, independently thinking for your own trading, for your own finances, for your own life, and being a professional. How much money am I going to spend this month? How much money am I going to spend this year? What are my goals? Highly detailed. Highly detailed. I'm going to do this by this time. If this does not work, why did it not work? And I want your goals to be realistic. This was the session, Joshua. I hope you enjoyed this one. I'll see you in the next one.